Everyone, hope we're doing well and welcome back to the Sunday session video. Anyone that's new to the channel, this is a weekly video that me and Luke put out there, and we quite simply just run through different pairs, different currency pairs, basically just give our prediction, give our best investment opportunities that we believe will be coming to you throughout this trading week. To start off with, I'm going to dive into the US dollar to the Japanese yen market. You'll see this on the screen now. This is the analysis I did about midway through the week, the trading week that has just gone. And quite simply, we had a break of structure here. So this structural point, it was a major swing low in the scheme of things. So the fact we've come down to break that structure, I think longer term does confirm bearishness to me. But I am seeing this consolidation as an accumulation. So what I'm expecting is that we have put a lower low in place. So that is giving me the bias that longer term we are going to be bearish. However, I think we are actually going to create a correctional wave here. So what's going to happen is we are going to accumulate price, manipulate people out of the market, make a push up to mitigate positions in the last impulsive wave down. However, we should protect the high. So that previous high set in the market, we shouldn't exceed that point. And then we'll find a reversal somewhere beneath that high and then make that next move lower. So anyway, without getting too sidetracked, I'll just explain through what I'm seeing here. So I have labeled out everything, all the events within this accumulation, your preliminary support, silent climax, automatic rally, secondary test, a sign of strength. Now what we've had here is a shakeout. So this is something that you might actually be unfamiliar with in an accumulation because it is quite rare that they do form within the trading range. It's quite simply just an early manipulation of the trading range like I've put here. So what's happened is the selling climax and the secondary test, we can see there's about 3-4 touches in this area, and what that's done is created a level of inducement. It has created liquidity at this point in the market, and this shakeout quite simply just manipulates this region, gets rid of the liquidity that was created here. And then we have, of course, that high volume reversal taking it back through. So the shakeout is just an early manipulation of the trading range. The reason that this isn't a spring, of course, because we know now that this is a spring, but at the time, we just have to analyze the supply and demand balance. If demand isn't in control enough, and the smart money operators don't believe that there's enough demand for the movement they want to cause, they will just, again, create more liquidity, have a further manipulation, and then make the move they want to move. So we saw the same thing again. Level of inducement, liquidity was created, the high volume pushed through, and then a continuation higher. So I'm just expecting price to eventually trade back down and mitigate this spring, this high volume push down that cleared the liquidity. No price action, no structure has come back down to it. You can see after the manipulation, it was a high volume push back up, and there's inefficient structure within here and unmitigated position. So I do want price to trade back down, mitigate before any move higher can occur. Now I have an alert set here. It's not guaranteed that price will trade down, find demand, reverse, make a move higher. It may blow through, which is exactly why we have our step 3 within our 3-step process. So once price pings this alert and it starts trading in to this final sell before buy candle, I will look to initiate buys if we see an accumulation on the lower time frames. So longer term, I'm hoping to be a buyer from this area, given that the correct entry confirmation is delivered. But shorter term, some more intraday like trading, we can look at this region. Now, I have noticed a distribution, and I believe the purpose of this distribution is just to reverse price, to bring it back down to this region, whereas I want to be a buyer from. But at this point, I do believe that we are going to have a move down. So we can look to take sell positions with that take profit at the top of this zone and try and ride that down. So after the up thrust, after that main structural high set in place, we've had multiple breaks of structure to the downside, confirming bearishness. We've also been protecting the highs. So quite simply, I'll just want to see this wave down, reverse, come back up, try and find supply in these final buys before sell, and then try and catch a sell all the way down into this region. Okay, so I've now moved over onto the XAU to USD, so the gold market. Now, I again have just identified a range. This is because in the past trading week, what happened is we had much less volatility than we usually have. It was quite range bound, as you would have noticed from this box and the box I had on the US dollar to Japanese yen market. What's happened is it's just been moving up and down within a range. We've not really had a trending market. So I'm hoping that with all the liquidity we've built up from trading inside the range, that this coming week, we're going to start running some of that liquidity and starting a new trend that we can start to trade moving forward. So looking inside of this area of consolidation that we've had, just above it, we have some inefficient price action, some inefficient structure. So eventually price is going to want to come to fill that, to actually mitigate any of the positions that may still be active in this inefficient area. But actually looking inside this box, we have a line. So this line that goes through the middle, as I've highlighted, it is a major support and resistance level that's been respected for years. And what I was expecting here is for a manipulation of this. Now, it's very convenient that this consolidation has happened on this level because it helps in the process of building and clearing the liquidity. So as price traded down, any technical traders, they would have got involved in buy positions here because we've had a simple reversal, a tap reversal off a highly respected level. It's given signs of the reversal continuation. Even again, we've had that second tap and we appear after breaking these structural highs that a bull run is now confirmed. Again, we are producing even more liquidity because everybody that is getting in on a buy position, hoping to catch this move, their stop losses are going to be just below these lows and just below this level. So what we want to do, in my opinion, we did want to actually run these lows before making any move higher. Straight after that, we set the high in the market, reversed, and exactly here is where we cleared this first bit of liquidity. Now, at first I was thinking we could actually be accumulating just because this is a respected level. It would make sense that even though we have manipulated the level, we may still reverse. So I saw price eventually trade down, expecting this to be a spring. And from this point, I actually tried to be a buyer in the market to try and trade it up into these zones. And then from there, just see if price breaks the highs. If so, we have accumulated and we can start to be a buyer in this market longer term. Or price will come to this zone, reverse lower, and then we can look to be a seller in this market. So as I've highlighted here, this zone holds importance to me because it's going to tell me whether or not my bias is to be a buyer or a seller moving forward. So the reason for this zone, the reason I've drawn this where I have, is just the simple inducement and momentum law. Looking at this area, we've had a liquidity point created. We've had inducement of sellers into the market. And then we see this high volume buy candle before a heavy reversal and sell off. Now, price has not come back up to this region and it has not mitigated that high volume push through that caused that liquidity clearance. As we've traded on, price has been hesitant to really push past here and it created some equal highs. Now, what that means is we've got a big area of liquidity again now at all of these structural highs. Now, as I said, I'm just going to be watching this area because once price approaches, I want to see if it is going to hold or if we are going for a bull run long term. That's going to be my deciding factor. And until then, my bias isn't actually that clear. Okay, so just to finish off on the US oil market, anybody that's been following me for a while, you'll know that I called out this distribution in the market and was looking to be a seller moving forward. So trying to find sells within this distribution. And then I also tried to find a sell here on the mitigation of this last buy before sell. Now, price has traded down and it's come and it's eventually now mitigated my downside point of interest whilst protecting this low. So confirming potential bullishness moving forward. This in itself is an accumulation. So we've now reversed the trend from this downwards trend into an upwards trend. So we want to be a buyer in this market. As you can see here, I am expecting price to trade back down, mitigate positions in the accumulation before making any real move higher. So I've just got an alert set here at around that 68.6. I'll just wait to see if price does trade down into that. If so, I'll look for entry confirmation and try and be a buyer longer term and ride that position up to these highs here. So that is going to conclude my section in this Sunday sessions. I'm going to pass you over now to Luke, who's going to do the same thing, run through the markets, run through his analysis, and give you some of his predictions on price. So I appreciate you guys joining me, and I'll pass you over to Luke.
Thank you, James, for your analysis. You've got some solid points there, and I look forward to seeing exactly how they play out in the week coming. Now we're going to move over to my analysis and some of the things that I'm looking at for the coming week. On top of that, I just want to run past the analysis I did last Sunday and kind of tie that up and give you my overall opinion on that. So if you remember correctly, on last week's Sunday session, we did say how price had broken through this point here. It had then retested and it looked to be taking its next impulse up. Now, my bias is still saying the exact same thing, and it's basically what I'm looking for price to do this coming week. Now, last week I didn't really place any trades. I kind of let the markets do their thing, just as price seems to have really been either distributing or accumulating throughout the week. So there wasn't really any opportunities to capitalize on those big swings that we usually do. For example, if we look at this week's data, we can see that yes, price has moved and there has been swings and there has been movements in the market, but there hasn't really been any large pushes in either direction, whether it be bullish or bearish. So as you can see from this week's data, price has really consolidated, or in other words, accumulated. It either accumulates before it's pushed up, or it distributes before it's dived down. Now, this for me looks like an accumulation, and I'll go into more detail why later on. But just to go back to my point, reason being I didn't place a trade was because there was no real move, neither up or down. Price has basically stayed within this range and it's not left it. Now, if we just get rid of this, as you can see, price is sitting at a very similar place than it was last Sunday. So if we just move this all the way across, you'll be able to see how price is sitting perfectly to how it was last Sunday. Now, the first thing that gives me a bias to a buy and the potential for price to push up is the fact that it is still sat above this point a week later. So that tells me that bears haven't been able to push the price down and the bulls are still in control of the market. Another reason for my bias is price continued to produce higher highs and higher lows. Yes, once price tapped into this point, which I predicted, we have seen a push lower. But if we look at the overall trend, it is still very much bullish. If we just go to the 4-hour time frame now, you'll be able to see how price is still reacting in a bullish manner. Now, like I said earlier, the reason why I didn't place a trade on this pair this week and I haven't traded this week is just because I felt like the markets haven't really provided us with an impulse in any direction, whether it be a buy or a sell. Price has really been consolidating and basically preparing itself for the next push up or down. Now, that's exactly what I think has happened to XAU USD this previous week. And now that we have had that consolidation and price has really prepared itself for its next push, I now think it is time for the next bull rally to begin. So as of Monday, I will be looking for bullish confirmation, and that will be down to looking at the lower time frames, seeing how the structure of the market is building, and then trying to find that entry based on the confirmation that I have. But I do believe price is going to come up to this point, probably break above before retesting and then taking its next move up. Now I wait for the right opportunity, hence why I didn't place a trade last week, as there was no clear direction. But now I really feel like price is going to produce that bullish rally that we were wanting. So as I say, as soon as we get the right confirmation this coming week, we will be placing positions on XAU to USD. Now in my eyes, it's much better to be a sitting duck and waiting for the right confirmation and entry, rather than being impulsive and jumping into a trade and then losing equity. So just to summarize on XAU USD, I am biased to a buy, and I truly believe that last week was just a phase where price was really consolidating and preparing for that next bullish move up. Now moving on to our next pair, Great British Pound to the Japanese Yen. Again, if you remember last week, we did say how we wanted price to push up, break above this point and start setting new highs to this previous level of supply. Now, we didn't actually get that. We saw a failed breakout and we saw price come back down to this point of previous demand before starting its next push up. Now, before I jump further into my analysis on this pair and my predictions for the coming week, I just want to take a moment to talk a little bit about our Learning Lounge group chat on Telegram. Now, if you're not in there, I would definitely recommend jumping in our Learning Lounge group chat. It's completely free. There's no charge to be in there. And throughout the week, we provide so much analysis along with educational content to help you guys become the best traders you can possibly be. We try every single day to provide our clients with educational content that you are able to read through and take notes from. But on top of that, provide you guys with our analysis and our thoughts on the market day in and day out. We believe this is the best way for our clients to learn. We will typically do our analysis that morning. We will give our bias for the day and give key points of interest, and then write a nice description explaining exactly what we're seeing and what we think the markets is going to do that day. Now, what this does is give our clients a real gist of our prediction, but it also gives them points in the market that they can keep their eye on, but on top of that, capitalize on potential trades. Now, I recommend our group chat to absolutely everyone, whether you're a beginner or a pro in this game. I think there's always ways of learning new things and improving your skills within this field of work. So if Forex is of interest to you, then go to the description and you'll find our Learning Lounge group chat link in there. So now that I've blabbered on a little bit about our Learning Lounge group chat, let's get back to our analysis. So as I mentioned earlier, we wanted price to break above this point before we really looked at capitalizing on a buy, if you remember correctly. Price looked to be breaking this point, but it turned out that it was a failed breakout and it came back down to this previous level of demand here. So after the markets have delivered us with lovely bearish structure after tapping into supply, now that we've had the tap into demand, I believe that we will start to see lovely bullish structure being produced. Now, why do I think that? Well, if we look here, we had the tap into demand. We've had a lovely impulse up. We've then had price retest. It's retested to this point, setting a new higher low. And it looks to be the start of its next impulse up. Now, as long as we get a break above this point, setting a new higher high, then that will confirm to me the start of a new bullish rally or the start of a new bullish trend. In which case, I will be looking to capitalize on a buy on this position. And what I'll do is I'll try and get in on the end of the retracement. So as soon as price has finished retesting and it starts to take its next impulse up, I will then look to capitalize on a buy, ensuring that my stop loss is tight and that I have a realistic goal for my take profit. Now, if we wanted to implement an indicator into our analysis today, we could use the fib just to try and get more confluence. So we would typically mark the start of the impulse to the end of the impulse. And then we would look for some clear reaction off one of the ratios. Now, as you can see, we don't really have a clear reaction off the golden ratios, those being the 61.8, 50 and 38.2. But we do seem to have a nice reaction of the 78.6. This tells us traders that price does seem to be reacting well to bullish structure. And as more data comes in, as of Monday, we can look to use the Fibonacci again to try and get that added confluence. Now, another thing we can use to get more confluence and more confirmation is the MACD indicator. And what we are looking for is for these two lines to basically diverge away from each other. So we can see how the blue line has crossed over the orange line going upwards. Now that tells us that price is bullish. And as long as the two lines continue to diverge away from each other, we should see lovely bullish data come in. Now, if the blue line was to break below the orange line and then start to diverge away, then we would be looking at sell positions. But as we've had a clear break above the orange line and the lines seem to be diverging away from each other, that gives us just more confirmation for bullish strength. Now, another thing us technical traders can do is implement support and resistance lines and trend lines. So we could actually draw a line out from here all the way to this point, and you can see price has perfectly reacted off this trend line that we've drawn out, and we have 1, 2, 3, 4 taps, which makes this a valid trend line. Now, ultimately, what you could do is wait for price to come back down, react off this trend line, and as soon as we see new bullish momentum start, we can then look to place a long position. So as part of my technical analysis today on this pair, I've gone over many things that you can use as confirmation. We've gone over the MACD. Yes, very brief, but hopefully you can get a brief understanding on that. We've also used the Fibonacci, where we can look at the start and end of impulses and retracements. And then we've also implemented a little bit of trend lines. So with trend lines, you have to have at least 3 valid taps on a trend line, and you can't just draw trend lines here, there, and everywhere. They have to match up nicely. So just to summarize on this pair, I am biased to a buy, and I am looking for price to break above this point, finish its retest, and then look to place my position on the start of its next impulse going up. I will be looking at price data alongside using some technical analysis as well as some indicators to give me that added confirmation and confluence of a bullish position and a potential entry on a trade. So as of Monday, it will be interesting to see exactly how price plays out, and it will be great if we can capitalize on a position this coming week. Now, this does come to the end of our analysis for this Sunday session. I hope you've enjoyed the video. If you have any questions or you have any feedback, then please drop it in the comments. We love to read the comments and reply to you guys, so get active in there. And if you haven't joined our Learning Lounge group chat already, go ahead and do so. Link is in the description. And if you want to check out some of our other videos, we do have some recommendations that come up at the end of the video during our outro. Again, thank you guys for watching, and we'll see you guys in the next Sunday sessions video.